Okay, in this video I'm going to show you how to record transactions when you're doing exchanges with other companies. This method works when the other company cuts a check to you. Now if the agreement is that you cut a check to them, then it's a totally different method of doing it in QuickBooks. But this method is a straightforward one. The first thing you have to do is create, for example, you buy pallets from them, either broken or repair pallets, but you know at the end of a trade, they have to cut a check to you. Okay, so then in this case, all you have to do is just create a credit memo, and then we'll select the company that you're doing the trade with. In this case, is ABC Company, and have that C there for the. This is used for the other method where you have to cut a check to them, but don't worry about this right now. This is just a straightforward credit memo, and then you put in the date, the credit number, credit memo number, and since we're going to buy broken pallets from that company, you just enter broken pallets, and then you could enter a quantity there if you like. If not, just enter the total amount that you're purchasing. So let's say in this example is $1,000, or let's say you bought 1,000 broken pallets at $1 each. It's still the same thing, 1,000. And we set up this account here. Of course, it's non-taxable. You're not going to charge tax for that. Ignore this here. I don't have a setup in this, but it should be non-taxable. But it doesn't, for this purpose, it's not going to affect it. So we won't even worry. This would say non-taxable here, but don't worry about it right now. So then, okay, so you bought the broken pallets. You created a credit memo, and you just press save. And then they'll ask you how you want to trade, give a refund, apply to an invoice. So we'll just retain it as an available credit. So then the next day, what happens is that they buy pallets from you. The other company buys, ABC Company buys pallets from you. So then you create the invoice. You go here, ABC Company, same thing. This is the next day, the 16th. And then you enter what they bought. In this case, let's say you sold them some number 2s, and they bought, let's say, just for number purposes, they bought 500 at 5. Okay, non-taxable. Don't worry about this for this purpose. So then now you created the invoice, save and close, print it out, you save it, you issue it. Okay, so now you receive a check from them, and you go to receive payment, look for the company, ABC Company. You select what they paid. It might be multiple invoices here. You select what they paid, or actually you enter the amount. So let's say they paid $1,500. You enter all the information, check number. You enter into the deposit to. If it's not reset up under undeposited funds, so now you apply the credit. So it says, you see here, it's available credits. So to apply those credits, click on discounts and credits, and they'll pop up the credit that it has. That's what they're paying. So let's say you have multiple accounts, but they're only this is where you select what to apply to that invoice to get it to match to the credits. So then it's checked already, so we don't need to do anything. So we'll press done. So then it applied the credit now. So see, the original amount was 2,500 and credits of 1,000. So then payment is 1,500, the same. It matches our check for 1,500. And again, here it tells you amount due to 2,500, applied 1,500 plus the credit that they had. So now it should all match up. Just save and close. And just to verify that it is it was taken off, you just go to open invoices, ABC. We don't have ABC, so there's no, see, it's applied. So let's do it again just to make sure. Receive payment, ABC. See, they have no invoices of due, so it clears up. You can also see it, just to show you. You could also see in the profit and loss. See, there's the income, which I think, yeah, it was on the 16th. So there it is. Pallet sales, that's your sales, and then also for your expenses, it shows up here. We bought. This is I had entered the bill earlier, but see, as you can see, the credit memo is applied as an expense. So there it is. It records your expense and it records your income, and you're all set. That's all you basically need to do, is create the credit amount for every time you buy broken pallets from the other company, and you record your invoice, or you record your invoice when you sell them pallets, and once you receive the check from them, then that's when you apply the credits to that invoice, and it should match every time, and everything should balance out. And that's how you record that transaction for when you buy pallets from a company and when you also sell pallets to them.